Well, that is the Finance Minister speaking at the City Insight into India Investor Conference earlier this morning. Joining us now, of course, from JPMorgan, Josh Lupton. Thanks very much for patiently waiting by. Let me start by asking you about the India story. As I was just pointing out that there's been some concern about the strength of the reform agenda that this government has managed to push ahead, the credibility of the GDP numbers. What do you make of the India story today?
I mean, I think it's positive. I think we've come a long way from, say, 2013, the taper tantrum. India was looking somewhat fragile and got hit fairly hard during that period. And since then, you've seen a new government come in with a lot of exciting new reform ideas. That they've started to push some of these through. There's been a little bit of a concern that maybe the heavy lifting in terms of the real important reform pieces have yet to be implemented, as you were pointing out earlier. And I think there is some caution there, and to really kind of spark the type of growth that certainly the investor community is looking for, I think you want to see these things pushed through. So it's the land reform, it's the GST, it's some of the labor reforms. And to do this, I think you have to make some difficult choices, and I think you also need to provide some type of transition relief, particularly to the rural economy, where, as you pointed out, things are certainly struggling a little bit more than the urban economy. So there's a lot of things to juggle here, but some important steps are being taken, and I think that's a positive.
So what kind of growth estimates are you factoring in for India?
Certainly not the number we saw in the first quarter.
But you don't buy that number?
No, and I don't think it's a matter of kind of not trusting what the government is producing, but it's just more of a movement to what arguably is a better way of measuring the economy, and I think there's some bumps along the way. But first quarter definitely seemed a little too strong for us. I think overall we are looking for an economy that's kind of running in the kind of 7% range over the course of this year. That includes that very large first quarter number. But looking forward, I think we're fairly upbeat, and it's one of the economies in the emerging market bloc that we're seeing some of the strongest outperformance of. So definitely India is standing out here.
You talked about the taper tantrum that we had to withstand in 2013. What do you make of the commentary that's coming from Janet Yellen? Markets seem to react and see it more dovish. What could be the possible impact, whether it's September or December? The hike is coming. What could be the impact on emerging markets like India?
Well, I mean, first of all, that's right. And Chairwoman Yellen was quick to say that, look, don't get so hung up on the timing of the first hike. It is coming, and I think the issue that she wants to stress is that, one, likely sometime this year. We still look for two hikes starting in September, but it is a close call after yesterday's somewhat more dovish report, projections.
So would you now think December?
Again, we're leaning towards a September and a December hike. I think the odds, are shifting a little bit more to just a December. I wouldn't rule out an October move either, but either way, I think the point, as you pointed out, is that it's the pace of hikes. And there she keeps stressing this will be a gradual path. And in that respect, they did lower the path about 25 basis points in terms of the hikes through 2015, lowering the dots in 2016 as well. So they are going to be cautious here. That doesn't mean it's going to be uneventful for the emerging markets. And so I think there are still a lot of concerns out there. I think investor positioning was a big part of the 2013 shakedown that is... we're not there. We don't have those types of positions, so we're a little less concerned. But just from a fundamental perspective, I think there are a lot of concerns across the emerging market bloc of how the fundamentals, after a long period of credit build-up in the aftermath of the financial crisis, how this is going to unwind. That is a big concern still.
So, there are concerns on how much liquidity we are going to see sloshing around in the system. In that context, then, within the emerging market basket, do you believe that India is best positioned today from a capital flows point of view?
Look, I think they've made a lot of good progress. We talked a little bit about the reform agenda. I think the current account position has certainly been benefited by the fall in oil prices. Terms of trade have certainly improved a lot from where they were in 2013. So there's been a lot of positive developments. And so in terms of where India sits right now relative to the rest of the emerging market bloc, I think it's sitting better, certainly better than 2013.
What about global growth? Because we've seen both the IMF as well as the World Bank cut down forecasts as far as global growth is concerned. There are concerns on how much China is actually slowing down. The concerns as far as global growth are concerned.
Yeah, so I mean, the year started out much softer than we would have thought, and it's partly the U.S., which was a big disappointment, yet another first quarter disappointment. There are issues around weather and some seasonal adjustment issues. India's not the only country that has some questionable Q1 GDP numbers, but I think, for the year as a whole, what we're seeing is a developed market that is going to be doing better, probably as a whole converging to something that's well above what we consider potential growth. We still are concerned, and we take a lot of signal from the weakness we are seeing across the emerging markets. India does stand out, but more broadly, we know China's downshifted, Russia's in a very deep recession, Brazil's in a deep recession, Turkey growth is kind of a little bit on the softer side. So, these are major players in the emerging market block, and I think for the region as a whole, we've been somewhat concerned that domestic demand through the first part of the year has been very weak, and the GDP numbers have really only been supported by a big net trade support from the developed markets. And that's probably going to unwind a little bit in the middle quarters of the year. And the question is whether there's a domestic demand engine that's going to come back to life in the EM. So there is, I think, some real legitimate concerns.
Speaking of concerns, how big a worry is Greece? July 1 is looming large, the possibility of a Brexit. But do you believe that the world is better prepared to cope with that?
Certainly better prepared. I think the institutions that exist in the euro area now just were non-existent, a few years ago. So those are important. The kind of the OMT, the ESM that exists in terms of the regional players there. There's a lot of firewalls in place. Also, the exposures to Greece, at least among the private sector, have been replaced by a public sector kind of lending into that. So in that sense, I think we are better prepared. Do I think that we're fully prepared? I don't think so. I think I hope policymakers do the right thing and do what it takes to kind of find some middle ground. No, I mean, I don't. I think when you look at the polls, the majority of people in Greece want to stay in the euro, want to stay in the euro area. I think when you look at the polls across Europe, that the euro area itself is much more than an economic experiment. It's a socio-political experiment that goes back to 2 devastating world wars, and so there's a lot of kind of institutional and popular support for this kind of broader social experiment.
My final question to you, we've got the finance minister right behind us actually talking to investors, telling the India story. You talked about how the heavy lifting on reforms is yet to take place. What are the 3 or 4 things that you would like to get more clarity on from the Indian government? What is it that you're going to be watching out for in terms of priorities?
Right. So the Land Acquisition Act, which hasn't been reformed in decades upon decades, obviously that's a big thing that a lot of businesses are looking to help continue the CapEx growth that we have seen. I mean, the RBI cuts that we've seen to date seems to be sparking a little bit more business enthusiasm.
This year?
I think they're going to have a hard time. I think, they'll probably be on hold from here, particularly with the, depending on how the monsoon season plays out and the inflation numbers. I think it's now the ball's in the court of the government to try to start delivering on some of these reforms. So the Land Acquisition Act is important. Obviously, the GST is on the table, and the timeline is getting short there. But those are 2 big elements. I think labor reforms also are certainly an element of this reform. Those are, as I said up front, those are hard things to do, and I appreciate that those are hard things to do. But I think, to really make this spark some kind of long-lasting, sustaining growth, you need to see progress.
Well, let's see if we do see progress on those issues. It's been a pleasure speaking with you. Thanks very much for joining us here on India Business Hour. That's the JPMorgan view, sir. We'll be back to you.
All right, Shereen. Well, let me quickly bring all of viewers up to speed with how global markets are doing. Some very interesting takeaways from that conversation Shereen was having on global markets as well.